You're now in the place to be with the CBDC Asset Group. Thank you for being a part of the group. Don't forget to like and subscribe so YouTube can suggest my video for other viewers. Okay, guys, today we got Raoul Paul, CEO and the co-founder of Real Vision Group and a global macro investor, talking about how hedge funds are taking your profits on futures contracts. Dan Moorhead, CEO of Pantera Capital, who launched the first crypto fund in the U.S. when Bitcoin was at $65 per coin in 2003, shares his advice on crypto and what he thinks about Bitcoin now. Says there's a lot more than one asset now. The majority of the future gains are from other things other than Bitcoin. We also have Minnesota Congressman Tom Emmer. He says the crypto space is empowering people who were never included into the financial network before. Don't forget to hit the like and subscribe buttons and share with family and friends.
But let's talk a little bit about the construction of this thing. This is a futures contract. So why does that matter? Well, the SEC like it because futures are regulated and it's on the CME and it's cleared so you don't have the custody problem. But one of the movements behind crypto was this self-custody, the ability to take control and get rid of middlemen. What the SEC has actually done is create a product that will deviate from the price of Bitcoin because of the futures contract. So it will trade at a premium in bull markets and a discount in bear markets, just like the GBTC product does. That opens massive opportunities for hedge funds to arbitrage it. So they would buy the Bitcoin and sell the futures contract and it settles at the correct price. So they make a fortune out of this. Not only that, but the construct of these ETFs also bring in, you or I could just go to the exchange and buy Bitcoin, right? We're paying the exchange a little bit of money. That's it. Done. We self-custodied it. Nobody else involved. This vehicle means that the arbitrageurs take their slice. The ETF provider takes their slice. The lawyer who set up the fund takes their slice. The administrator, the auditor. I mean, everybody is taking a slice out of your pie. And we've seen this with stuff like the USO contract, the oil one. The futures then trade at massive contangos. And all that happens is you don't get the performance. And everybody says, well, Bitcoin's up 300%, and how come it only made 100%? Yeah, because you've been screwed. If the SEC really cared about looking after investors, they wouldn't allow these futures contract versions. I understand for commodities it's useful, particularly with agricultural commodities, because you can't store them. So a futures contract works, and it's suboptimal is what it is. But there's no excuse for something physical like this. It's just no excuse.
Dan, as somebody who's gone on this journey, what are you excited about now? I mean, these new DeFi lending models. What's the next big zeitgeist?
Yeah, I guess I would say that to bring it full circle is there is more than one asset now, and a lot of my friends are Bitcoin maximalists, and it's got to be about Bitcoin. But the only thing I would share as advice to investors is there are so many different interesting protocols to invest in out there, in so many different companies, and so a portfolio should be more than just one thing. And the perspective I would have is Bitcoin's been amazing. Our fund's up 600x, so Bitcoin's done great. And I think it's going to go up another 10x or something from here. But I'm not sure that I actually think the majority of future gains are from things other than Bitcoin. And I know that sounds heretical to some people in the audience, but it's kind of like in 1998, saying that the majority of future tech gains were not in Microsoft. Microsoft did great. It was worth $260 billion then, but Amazon was worth $10 billion, Apple was worth $1 billion, and Google and Facebook were 0. They weren't even existing yet. And since then, Microsoft's only been 20% of the gains since 1998 in tech. All these other companies that didn't even exist in 1998. And that's the spirit I have here, is that I think Bitcoin's going to go up a ton. It's a huge, great investment. That's all you can get through your IC. You know, you should go on Bitcoin. But like, if you can be long a basket of things, I think it's going to outperform.
Chair Powell, or it's Treasury Secretary Yellen, and the list goes on and on. I mean, you've got a potential appointment to the OCC that could be very problematic as well. Ms. Amavara, a Cornell law professor, Paul, you probably are aware, and I just have her quotes in front of me because they're so amazing. She wants to end banking as we know it, and she thinks digital tokens perpetuate the dysfunctional financial system we already have. I got news for you. The crypto space is actually empowering people who have never been able to get into the financial system. Right. So it's just the opposite of what she thinks, or at least her statements. Again, it goes back to your question: is there a purpose to what they're doing and saying? Do they actually have an end game that they're pursuing, or do they just not understand what they're dealing with? I think there is an agenda, but I'm not clear on what it is right now. And really, let's go back to the purpose. We need clarity in all this stuff so that we can continue. We've got 55 million Americans in the crypto market. You got a market that's almost $2 trillion in value, fastest growing thing that we've seen in decades. Let's look at it as an opportunity, and as a government, let's try to work with this industry and the people that are driving it to grow it and create even bigger opportunities right here in the United States.